Today we're diving into an important question that's probably crossed your mind if you're looking to help someone buy a home. Should you co-sign or should you be a co-borrower on the mortgage? It's a big decision, and I'm here to help you figure out the right move. Sometimes a loved one, like your child or relative, might need a little extra help to turn their dream of home ownership into a reality. Co-signing or co-borrowing on a mortgage can be a powerful way to help. But let me tell you, it's more than just putting your name on a piece of paper. It's about setting them up for success while also understanding the risks. Why would someone need a cosigner? First, it's generally about the income. When somebody's going through the pre-qualification process, part of what the lender's looking at is and calculating is the debt to income ratio. And that all comes down to income versus debts. Well, if we have somebody that their income versus debts is out of the ratios allowed by the home lending guidelines, many times they turn to a family member or relative to help them from a qualifying standpoint. The best type of cosigner or co-borrower, if you will, is going to be somebody that has income and doesn't have a ton of debt. Because if we look to add a parent or relative on the loan as a co-borrower, let's say, and they have solid income, but they have excessive debt, that's not going to help the scenario, because when you're adding a cosigner or a co-borrower on the mortgage for qualifying purposes, we're now going to take the income between the two people, let's say it's a child and a parent, and we're going to also take all of the debt between the two people. And then that's how the lender's going to approach the debt to income ratio. So it still has to meet the lending guidelines. I've often had discussions with buyers who think, maybe I can have my grandparents co-sign. Well, if the grandparents don't have enough income, it's not going to help the situation, even though they may be willing. Now, you may think if you have great credit, but your child, let's say, doesn't have great credit, that your credit profile can overcome their credit profile. And it doesn't really work that way, because the lending guidelines actually have minimum credit scores. So let's say that the best loan strategy for your child might be an FHA loan. Let's just say after they've gone through the process, the lender determines FHA is the best option. Well, FHA has a minimum of a 580 credit score to be able to qualify for the home loan. Now, some lenders actually cut that off much higher in the scoring process. Let's say it's a 600 or a 620 credit score. If your child in this example has a 530 credit score, even if you have an 800 credit score, they still don't qualify, because the credit score between both borrowers has to meet the lending guidelines. So the higher credit score doesn't offset the lower credit score. That's really important here. When we think about cosigners and co-borrowers, it really almost always comes down to the debt to income ratio and the need to get additional income to be able to lower the debt to income ratio to help that person qualify for a home loan. Having consulted parents over the years, they're often interested in knowing the difference between a co-signer and a co-borrower. Now, the definition of a co-signer is this: you're going to be co-signing on the loan, meaning you're guaranteeing the loan. But you don't necessarily need to be on the security instrument that gives you ownership in the property. Now, out of all of the years that I've been lending, and it's been a few, the majority of the time that is not what parents opt for, because if they're going to be guaranteed on the home loan, they want to be on the warranty deed that gives them rights to the property and ownership in the property. But there have been a few situations based on estate planning or things going on in one's life where they don't want to be an actual legal owner of the property. And if that's your situation, then a cosigner direction may be the best option for you. But more traditionally, we will see a parent or a relative being listed as a co-borrower. Now, as a co-borrower, you are still guaranteeing the home loan, but you also have interest in the property, ownership interest in the property. And this is important. And we do these things as parents, and I can say this, I have two sons in their 20s. When we do this because we're trying to help them achieve their dream of home ownership. However, the risks involved are still important to understand. If your child, let's say in this scenario, doesn't pay the house payment, you're still legally responsible to pay the house payment because you have guaranteed the home loan. And if you're not paying attention or you don't know that they have gone late and haven't paid the house payment, that could directly impact your credit. So if you're ever in a position where you're wanting to co-sign for somebody out of the goodness of your heart, make sure that you have an agreement in place where you understand what's going on. When was the mortgage due? When was it paid? If it's not paid, if it's not going to be paid, trying to intercede and help with that before it impacts your credit. Because as we know, once that delinquency goes past 30 days, that's going to be a negative remark on your credit profile, which will drop your credit score. The second component here is that, let's just say if by chance you have trusted that the payment's being paid, you're not aware that there's issues and payment has not been made, and then foreclosure proceedings start. You're still legally responsible for this house. You have ownership interest in the house. And this is why I advocate for being a co-borrower as a co-signer. Because everything I just said as a co-signer, let's say that is the case, and you have somebody that you've co-signed for, but now you don't have ownership interest in the property. You're just guaranteed the loan. There's really nothing you can do about it because you don't have ownership interest in the property. This is why as a parent, I would only consider this if I was going to be a co-borrower on the home loan. It gives me ownership interest in the property. If something does happen, heaven forbid, where the payment isn't getting paid, then I have rights and can get involved and assure that my credit is protected and the situation is rectified. Now, many times parents and relatives are doing this thinking that it's going to be for a period of time, helping that child or relative get into the home and then come off the home loan at some point. It's not as easy as what you might think, because the only way to get off the mortgage is to sell the house or have the home refinanced. And going through the refinance process, the borrower is still going to have to be able to qualify. So if something hasn't changed from when they initially looked to try to purchase the house on their own and do the financing in their own name without help, if nothing has changed since then, it's very likely that they will not be able to qualify on their own at the refinance. There's a myth out there that you can just, after 12 months of solid payment or 24 months of solid payment, then you can be removed. It doesn't work that way. The only way you're going to get removed from that mortgage is if they sell the property or the property is refinanced. Now, one caveat that a lot of people don't consider when they're thinking about co-signing for a family member or relative, and that is the impact to us as the co-signer or co-borrower when we go to obtain financing in the future. And I think that there is some misunderstanding about that. You still guaranteed your name on that home loan, which means that debt is going to be calculated or need to be addressed into your qualifying ratios on any future financing for home loans or equity lines of credit going forward. I mention that because we have been working with many buyers over the years, and we had a scenario where we actually had somebody pre-approved, under contract, getting ready to close on their house, and as a parent, they didn't think that there was going to be any impact for them to co-sign on a student loan. Again, when you're co-signing on any loan, you're guaranteeing the loan, which means it must be calculated into your qualifying ratios from a debt to income standpoint, which could impact your ability to qualify. Be thoughtful about anything that you're co-signing on, because it will need to be disclosed in future home loan financing that you may be doing yourself. Now, after hearing all of this, you might be like, I don't know, Kelly. I'm not sure that I want to co-sign or be a co-borrower for a family member or relative. How else could they potentially get into a position of being able to qualify? Well, depending on their debt versus their income, that's really the driving factor. So if you are in a position to help them maybe reduce or lower that debt, and they have enough income to be able to qualify with a reduction in debt, that could be a scenario. So you could consider potentially doing a gift of funds or helping them remove the debt, and in that case, maybe they can qualify for the home loan on their own without needing a co-signer or a co-borrower. At the end of the day, the most important thing is to really think before you sign anything. Consider your options, talk to a financial advisor, talk to a tax advisor, and make sure the decision you're making is the right one for both you and your loved one. Thanks so much for watching this. If you found value in this video, please don't forget to hit that like button and subscribe for more tips on navigating the world of home ownership and mortgages.